Hello and welcome back to the Complete Scalp Trading course by Wealthy Education. In this video, we'll talk about risk management for scalping. And to be honest, this is risk management for most trading. That it really doesn't change much, just the numbers. So, for example, if you're swing trading or trend trading, maybe you are thinking in units of weeks or hundreds of points, as opposed to scalp. It might be 1 point, 2 point, 3 point, that type of thing. The chart I have in front of you should look familiar. It's PayPal. We were just on it. This is a 5 minute chart. And there are a lot of different things that you need to keep in the back of your mind if you choose to take a trade. Very first one is risk and reward. So, how much are you willing to risk and what is your expected return? Minimum. You should be looking for a $2 return for every dollar risk or 2 unit for every 1 unit risk. So if your target is, let's just say you're shorting this and your target is 20 cents, your stop can't be any more than 10. And the reason this is important is because you are trading in a very noisy environment as a scalper, so you have to be diligent. This allows you to be, let's put it this way. If you are, just say 10 and 10 cents and 10 cents, risk to reward. 50% win and loss ratio really isn't break even because there are some spread cost involved or whatever, but it's close enough. So if you have 5 trades at 2 to 1, and let's just say you make the first one, you miss the next one, so you're down one plus 2. You miss another one, you're down 1, so now you're down 1 unit, $1, and you make this one, you're up 1. So that means you only have to be right about 40% of the time in a 5 trade situation. Now, over the course of time, if you get good, you're hoping to get at least 40%. And really, at this point, I'd even argue that 1 to 3 is even better with scalping. Because in that scenario, if you get a 40% hit rate, now you're talking it's plus 3 total. Those are all wiped out uh, by the extension. These wipe that out, but now the $3 or 3 cents or whatever wipes that out. So that's the first thing that you need to pay attention. Stop placements. Typically, stop placements are going to be where momentum has shifted against you. So if you sold here, you recognize that there's been a lot of sellers in that area. If we break above there, something's changed. Pretty straightforward. Signs of momentum loss. So let's go ahead and switch markets here. Let's go to the euro dollar. We've been rallying here and then we get a big red candle, a big negative move during that 5 minute period. After this bounce, you're kind of in a downtrend. That's actually an entry signal to sell, just as you may have shorted there and then you see that we get 2 or 3 green candles. It might be time to take your profit. Again, with scalping, you're better off having a set stop loss and a set target and just let it do its thing. Volume analysis can come into play as well. You need a market that has volume. So, for example, Bitcoin. The volume in Forex is actually just based upon the server that you're trading. It's called tick volume. It's not really the same thing as the amount of trades. But notice here's a trade where we had bounced from there. We had a lot of momentum and a lot of volume come in. And it looks to me like the buyers are starting to take over, and that's exactly what happened. You put your stop loss on the other side, and you go from there. There are what is known as support and resistance levels. That's essentially what I've been talking about this whole time. The market's been supported there. Buyers come in. If you break down below there, the market's telling you something that it wants to go lower. There's also something known as Fibonacci. We'll get into this later, but they are levels that traders look for based upon mathematics. This thing pulled back right around 50% and we went higher. That's kind of something that people look for as well. Really, at this point, the most important thing is to pay attention to swing high and swing lows on short-term charts. Make sure that, make the market break through everybody else's orders before they take yours out. Also, if you're looking at recent history, we broke through all of this, and this is an area that we had seen a lot of buying at, so that makes a nice target. And see how you could have put your stop loss right there, and that's like a 3-to-1 target. So it is possible. You just have to think the things out before pressing the buy or sell button. We'll go through all of this again later in the course, but I just wanted to give you a fundamental understanding of what I will be talking about. That concludes Module 1, the Scalp Trading Foundation. Now we'll start to get into the more of the meat of the program in Module 2, Profitable Scalp Trading Strategies.